Infosys is first in line, but there are other reasons for training the spotlight on Infy this time, and that's because after a year of ups and downs, Infosys is expected to get back to its winning ways this fourth quarter. Shreya Roy and Kritika Saxena bring us what analysts expect from the IT pack.
A slow but steady recovery in the US, stability in demand, and certainty on client budgets are all pointing towards an improved March quarter performance for Indian IT. According to analysts, revenue growth is likely to be in the range of 1.8 to 4.1% for the top 4 tech majors. Volumes too could be steady this Q4 in the range of 2 to 4%. But margins may see some pressure with the depreciation of major currencies against the dollar, resulting in a negative cross-currency impact of 20 to 60 basis points.
What is important is that relative to the December quarter, definitely we will see a volume uptick in this quarter. And on the margin side also, we'll see soft margin performance for this quarter.
Breaking it up company-wise, on a sequential basis, Infosys is largely expected to lead the pack, followed by steady performances by both TCS and HCL. Wipro, which is yet to see deal closures result in revenue growth, may lag behind peers with a muted growth for another 1 to 2 quarters.
In this quarter, Infosys will consolidate the full quarter revenues from Lodestone, and on the basis of that, Infosys is likely to post a 4.1% kind of sequential growth in the top line. For the TCS, we expect 3.5% kind of sequential growth in revenues, and the HCL Tech also likely to post a 3% kind of top line growth. In the laggards, we believe that Wipro is likely to remain on the lower side.
However, for FY13, Infosys is unlikely to surprise positively, and there is some buzz that the company's management may do away with its practice of giving guidance altogether.
Whatever is going to come in Friday is going to be very keenly watched, but it doesn't look like as if they are going to have a huge positive surprise. The surprise that came last quarter, that was the one that really turned around the stock performance, was largely on account of guiding very low and delivering slightly better than that.
But despite the likelihood of a relatively good quarter, analysts feel Indian IT is still not out of the woods.
And that is why management commentary will be key this quarter, with the financial results of global majors such as Oracle and Accenture suggesting slow recovery in discretionary spend. What the big four here have to say will set the tone for the demand outlook in FY14. In Bangalore, Shreya Roy.